Well, friends, ladies and gents, selamat sore, salam sehat dan sejahtera. So wherever you are, thank you for joining us and spending your afternoon with us. So this afternoon, we're gonna discuss pitfalls and opportunities, tech investing in the new normal. So before I start, this event is organized by the Harvard Club of Indonesia, and I would like to acknowledge Ibu Meli Darsa, who is the president of the Harvard Club of Indonesia. Ibu Meli, if you can kindly give an opening remark. Thank you so much.
Thank you, Daniel. Good afternoon, everybody who have joined us for this webinar. Webinars have become the new normal. I think most of us have probably attended more webinars this whole few months than we have ever done in our whole lives, right? But basically, I just want to say welcome to particularly the Harvard Business School community. In our board now, we actually have designed it so that actually all the schools are more duly represented, so that they're actually a school rep that is part of the enlarged board, and your representative is actually also from the business school and also from the executive program. But the whole idea about Harvard Club Indonesia is that it actually becomes the umbrella for all the schools to actually do activities and to become more active. And we're very thrilled that Harvard Business School is actually using this platform, because we know that in the years before, actually the Harvard Business School alumni have been the most active in terms of the activities. And now with the fact that we're now joining together with the Harvard Club platforms, then we hope that we can actually reach out more to many more in the communities and also share more of our insight and knowledge, and actually just become more impactful in the things that we actually are doing from day to day. And we're very thrilled today as well for all the speakers that are actually all experts and also all from Harvard, with the exception of one, but actually probably the most pretty and also the most brilliant probably here from Wharton School. And so thank you very much for enriching this. I hope that all of you will continue to be active and join events like this. It makes it all the worthwhile when we actually have webinars that are well attended. Notwithstanding, actually we do record it and then share it in our YouTube channel. So thank you again, Daniel, for organizing this, and let me give it to you. And I would like to apologize that I might have to leave a little bit early because I have another engagement later in the afternoon, but I will be listening to most part of the webinar. Again, good luck, everybody. I'm sure we all have fun.
Thank you, Meli. Thank you. So I think tech and also tech investing is probably on the top of a lot of people's mind, especially for us, business people. I mean, if just you've heard this a lot, but just in the this year alone, the big in the U.S., the big five: Amazon, Microsoft, Facebook, Apple, and Google has added a market cap of multiple of our GDP. If these five companies combine, they will be the third largest economy in the world. Almost 7 trillion. 20%, a full 20% of the mighty U.S. Market cap is only 5 companies. So everyone wants to know how to, be tech enabled, how to make money from it. And I think we have a panelist here who can answer a lot of our questions. So first of all, let me introduce myself a little bit. My name is Daniel Budiman. I am HBS MBA class of 1995. That sounds ancient to you, probably. I am a co-founder and partner of Mahanusa Capital, and we are a company that focuses on several sectors: consumer goods, property, nickel mining, fund management, but we also dabble in technology like everyone else. We are LPs and cornerstone LPs of several funds, and also invest directly in several companies. But I do consider myself quite not knowledgeable in the world of tech investing. So I think we can learn from the four panelists. First of all, let me ask you guys, the panelists, to introduce yourself. Just short introduction, your personal background, your company, and also what is the most interesting tech world news or happening that you heard or found or have done since in the pandemic era. Shall we start with Jeff?
Sure. Thanks a lot, Daniel. Hi, everyone. Hope everyone is safe and in a high spirit. We really need to be staying positive in these current times. So a bit about myself. I'm a co-founder of Alpha JWC Ventures. We are early stage VC fund, Indonesia-focused fund. We manage 2 funds now with the latest fund of 123 million. We invest from seed until Series B, ticket size ranging from few hundred thousand to up to $10 million US dollars. And I'm HBS OPM 53, just graduated last year before, luckily before the whole COVID things happened. Otherwise, I might have a difficulty in the graduation, right? So I'm already graduated, fully a legal alumni of HBS now. Yeah. Sorry, your question was, Daniel?
What the one most exciting or interesting news tech news that or happening that you heard in the COVID era, in the pandemic era?
So one news, or I think one thing that I've been following, and every time I look at it, there's a bit of joy and also a bit of disappointment. Is if we look into the C Group's stock price, very excited because it carries the whole Southeast Asian digital ecosystem. C Group, as you know, they are the owner of Shopee and also Garena. They are now about 70 billion US dollar company, a Southeast Asian company that's worth 70 billion, 70, right? Very glad to see that. I think that's going to have a lot of benefit, giving our region a lot of benefit and tailwind. Disappointment because didn't buy enough, or I should have invested more, things like that, right? But let's leave it for another topic.
Thank you, Jeff. Thank you. Aditya.
Sure. Thanks, Daniel. So I'm HBS MBA 2014. I am a director at North Star Group, which is a private equity fund focused on Indonesia, and I am also a venture partner at Go Ventures. Go Ventures is a $175 million VC fund. Our anchor, a cornerstone investor, is Gojek. We have a close partnership with them. We are typically investing $2 million to $10 million per company that we invest in. Like Jeff, sorry. We're doing Series A and Series B investments, but we stray away from the seed investments that a couple of the other panelists are familiar with. In terms of what's been exciting and interesting for me is just actually seeing how much technology adoption has happened in the Indonesian economy over the course of this pandemic. It's been a horrible time. And it's been very hard for a lot of people and a lot of businesses. But what's really exciting to see is that even very small businesses, warung owners, toko owners, are digitizing their businesses, and almost everybody is actually trying to take advantage of the situation to get more relevant with their offerings for their customers.
Thank you, Aditya. Yiping?
Hi everyone, thanks for having me as a guest of HBS. I'm ex-Penn, graduated 2005. Mostly from Penn Engineering, and took some courses in Wharton too, so the engineering blood is also pretty deep, I guess. I am a partner at Quest Ventures. It is an early stage fund. We invest from seed to pre-B stages. Sweet spot is mainly still post-seed to Series A. Before I became a venture capitalist, I have been a serial entrepreneur. 2014, I actually exited my startup. It got acquired by Lipo Group. That's when I actually spent 3 full years in Jakarta. So I love the Indonesian culture. I count myself half an Indonesian. Been wanting to travel back, so let's wait for post-COVID. So that's about me. And the interesting topic, definitely with Jeffrey, I have a lot about the stock market right now. Every night I'm playing with something. But I think also there's something else I think on my mind in terms of something very interesting is that certain countries in the world have some exuberance still where property prices are actually going up and not down. So me and my husband, we were looking to buy something, and especially say in Europe where he's from, in Spain, the property prices are not down, and we're stretching our head. Isn't there a crisis? So that for me was like insane. So now I had a conversation with a friend, a HBS MBA professor is saying that the students are asking, how does the stock market really work?
Exactly.
And now we are relearning how it is working. So that's very interesting for me.
Thank you, Yuping. And last but not least, Dini.
Hi guys, everybody calls me Dimi, but my name is actually Dimitra Taslim. I'm actually from South Sumatra, Palembang. So if there's anybody on the call from South Sumatra, I'm a South Sumatra boy. I grew up in Singapore, went to school overseas, started my career in consulting and private equity and dabbled in angel investing, in which I lost a lot of money learning. And eventually became a VC, jumped over to entrepreneurship, came back to the VC side of the table, and now I'm with GGV Capital. GGV Capital is a multi-stage global venture capital fund. We invest anything from the seed stage all the way to pre-IPO. In fact, in the past, we have even taken on exposure in the public markets. When we see a stock that we think is mispriced by equity analysts, we can consider that sort of position. So we are very sort of flexible fund, but our bread and butter is really in Series A and C. That's where we really shine and deploy capital anywhere from 5 to in excess of 50 million. Over the life cycle of a company, we can put up to more than 100 million into a GGV portfolio company. We invest globally around the world. We're a global fund, started out in Singapore and Silicon Valley, and now we are also in South Asia, Southeast Asia, Latin America, and we have also invested in European companies as well. We are very focused on what we call the next billion mobile internet users coming out from the Southern Hemisphere, so LATAM, South Asia and Southeast Asia, and that's where we are putting in a lot of research and work right now. I'm very interested in cloud computing, 5G and edge computing stocks like Fastly. I think that the sort of forced adoption of technology and digital penetration is only going to increase our usage of the internet, and we're going to have to find ways to reduce latency and keep the user experience very stable. So I'm looking at a lot of 5G and cloud computing and edge computing stocks. Yeah. And obviously, like Jeff, I totally missed out on I looked at C Group and it was $12. Never bought it.
Thank you, Dimi. I think we all missed out on C. For all you who just joined, the panelists just introduced themselves, and we one in common theme is that we are all beating ourselves for not investing in SEA. Which is now the largest stock in Southeast Asia, bigger than DBS. So actually on that topic, let's just start. So, valuation is just, I mean, for the people who are not in the tech sector, obviously, sometimes people are, even Yiping, you're scratching your head on property, we're scratching our head on tech valuation, right? I mean, so I think Zoom is trading at 40 times revenue, and C, I don't know, I think C is at 30 times or something like that, 35 times revenue. So so Jeff, congratulations! You just today, I guess, it was announced that you guys co-led the $54 million investment in Pasar Polis in Indonesia. Congratulations for that. So how is with the capital market valuing Talkstack so highly, how does it, and again, in fact, after the pandemic, it's even higher. What is the impact to the private companies that you're trying to invest in? I mean, and also, how do you compete in a smart way to, to invest in choice companies?
Yeah, so maybe I can start, because usually when we invest, we are the first investor in the cap table. So if the valuation is high or too high, usually we take some responsibility to that, right? And after that, maybe Aditya or Dimi usually form the follow-on valuation, right? So first of all, let me give a bit of high-level context and maybe give the audience a bit on my view about how we should think about the public listed valuation now, which is extremely high by any measure that we know, and how to tie it with what's happening on the ground. So I can speak at least from Indonesian market situation. So first of all, the way we look into companies and evaluation pre or post or during COVID is actually pretty similar. So we believe that one key success factor of investing in a venture capital, which is a very risky investment, is valuation, right? Because if we learn from history, investing in unicorn doesn't guarantee a great success. So in fact, in the early ecosystem, or in the early market, like Southeast Asia, we are still early. If the company raised too much money, have a lot of dilution, then even though the company can reach a unicorn status, it doesn't mean it's a good investment for the investor. So that is why for us, we always think about valuation when we invest. And to be honest, that's one of the key success factor to our fund so far. So in terms of the private valuation now, in fact, now in a lot of cases, we see that the valuation is actually quite have a meaningful correction, meaning that previously, prior COVID, I think we can see some of the highly valued companies, but still got the valuation that they want because of, one, there's still momentum, and there's also still very positive environment. Now I think it's going to be challenging for anyone to have quite a high valuation, especially in early stage. Early stage meaning as early as seed. Seed means that a founder with a pitch deck without anything else, right? I don't think some maybe don't even have a name card, right? So it's very important to know that at least in the private market, in the current situation, valuation is still maintained, and I would say that it's pretty healthy. So there's no worries on that. On the global level, maybe Dimi, you can share what you see in the market. But I think now the global tech stocks is very, very richly valued, and I think there's a pros and cons to that. But I leave to the other panelists to comment.
Yeah, let's go to Dimi, since GGV invests in Silicon Valley, China, India, Southeast Asia. I mean, how do you guys see valuation these days? And also, I see that you guys co-invest a lot with PE funds, because there's so much liquidity everywhere, and the PE funds also have so much dry powder. Are they a friend, or are they could they be disruptive to the to the market? Just for example, because I think KKR and TPG just put $200 million today in Property Guru. So KKR, TPG, I mean, what's going on?
Okay, I'll start with the first part of the question first on the valuation. I think it's very important. I'm still a student of venture capital history. I'm still learning a lot about venture capital. But if let's take the audience back, into a time machine, and we go back to the year 97, right? If you're in 97 and you're one of the few VCs who looked at the market and you said the market is hot, it's too hot, I'm going to take my foot off the pedal. You would have missed out on the growth in 97, 98, 99 and 2000. And in fact, in 2000, when the dot-com bust happened, a lot of the VCs, the dot-com bust happened after their IPO lockup period. So a lot of the VCs would have exited anyway and made a ton of money before the dot-com bust happened. So now if we fast forward back to the year 2004, 2005, and you look at funds, VC funds with vintages that started out in 95, right? And if you were one of the VC funds in 97 that thought that you were sensible and rational and say the market is too hot and you stop investing, you would have looked like the worst performing asset class in the pension portfolio, worse than the bonds, worse than the real estate, worse than leveraged buyouts, worse than public equities, worse than everything else. And all that happened because you thought you were a sensible VC and you thought that the market was too hot and you stopped investing in 97, 98, 99, and 2000, where most of the returns happen, right? So I'm giving this example because I'm trying to point out that it is just as difficult to time the private markets as it is to time the public markets. If you try and time the private market, if you always try and come in low and sell high, you're going to hurt your returns, you're going to hurt your LPs. And so at GGV, we think that the only way to invest in VC, one of the best ways, is to have a consistent and a disciplined definition of what great looks like. Because if you invest in great models, great founders solving great big problems, then even if the tough times hit, they will stumble and fall. But great, the difference between great and good is that great they get up and running pretty quickly. And so that's my point, right? Like if you look at the dot-com, everybody talks about dot-com bust, but a lot of people don't realize a lot of the money was actually made in 97, 98, 99, where a lot of the rational and sensible guys who took their foot off the pedal, they actually lost out on all of that. So what I'm saying is, even if things look, doesn't matter good times or bad times, it doesn't matter if things look expensive or cheap, if you believe in the business and the founder, you should invest. So I think that's how we think about this sort of valuation mind trap, if you will. In terms of the PE companies investing in earlier stages, I think it makes sense. If you look at the difference between emerging markets like Southeast Asia and developed markets, in Southeast Asia, not a lot of assets to buy, a lot of family-owned businesses, very high ego, don't want to sell it to an independent investor type of situation, right? So I think for a lot of the guys, like the names that you mentioned, in search of yield, they have to go earlier. And that's why I think that investing in Southeast Asia is getting more competitive, right? Because the early stage guys like Jeff are successfully raising bigger funds that they can now do A and maybe follow on to B. And then you have the PE guys who used to do traditional PE, but when they came to Southeast Asia, they realized that, oh no, I can't just do buyouts. Now I got to do C. Maybe I'll come in at B and do a small check. And then you have the GGV and the other global funds coming in as well. So that sort of, that B to C stage where previously there was a gap, there is no gap anymore. There's a lot of money right now and it's very, very competitive.
Thank you, Dimi. And very impressive, talking about a period of time when you were about 9 years old.
That's right. That's why I'm a student of venture capital history. You got to learn from other people's mistakes. Learn on someone else's dime.
Absolutely. Okay. So Aditya, so what Jeff and Dimi is saying, I guess people moving up, and there's a lot of focus on A++, A, B, C, D, stages. So do you guys see more opportunities in the early stage?
Yeah, I think the reality is that there's good opportunities across the spectrum. And I agree with what Dimi said, is that at the end of the day, investing is micro. There's a macro overlay to everything. But at the end of the day, the check you write is into a micro situation, right? You invest in one company at one point in time in one industry. So I think, there's good money to be made in all stages of VC. I think our ecosystem is developed. I think, as Dimi mentioned, we had an issue in the Southeast Asian ecosystem maybe 3 or 4 years ago, where we had a bunch of funds who could do seeds and Series A's, but then we had nobody who could do B's and C's. And so you'd often see 2 Series A investors coming together to get a $10 million round done for a Series B. And I think, thankfully our ecosystem has matured and developed. And yes, some of the guys like Warburg and KKR have managed to come down and help fill some of that gap. And guys like GGV have hired guys like Dimi to be in Southeast Asia, which is good. So I think, there's now capital across the spectrum that wasn't there 3 or 4 years ago. But I also think that there's large opportunities that weren't there 3 or 4 years ago. I think one of the things that's happened over the last, maybe it's a little bit longer, maybe the 5 or 6 years, is that there's a lot more opportunities for businesses to scale now. A lot of that base level infrastructure for the digital economy has started to be built. So if you think about things like logistics and payments that are kind of critical, and then cheap and affordable internet access that's high speed, a lot of that stuff has started developing in the last 5-6 years in Southeast Asia. And with that means that there can be a lot more large companies built in the region as well. So do I think we have a glut of capital in Southeast Asia? I don't think it's a glut, but I think investors need to continue being, cautious and thoughtful about the opportunities that they go into.
Thank you. Thank you. Talking about capital, Yiping, for Quest Ventures, I look at Quest and, I'm struck by the geographical spread. You guys are active in Southeast Asia, but also Kazakhstan, and you do VC, accelerator, marine fund, sustainability fund, and of course, you're also right now in the middle of raising your second fund. How is the fundraising process these days? Are there a lot of interest in Southeast Asia, or what is LPs thinking right now as far as Southeast Asia and sectors to invest in?
Yep. Thanks, Daniel. It's a very good question. Right now, I think in terms of fundraising, I think you made a point where there's still lots of dry powder out there. So lots of liquidity still. So we definitely see that if you are no longer a first-time fund, it's actually rather easy to still raise. I think globally speaking, I think on average there is a slight down in terms of overall funds deployed and raised. However, it is a huge amount is still going to the slightly fund 2, fund 3 type funds. However, I think while we are raising, there has been, the last few months, if anyone is starting in the last few months, it would have been really tough. So we made our first close in March, right, kind of in the middle of craziness before lockdown though. So we're pretty, I think, happy and blessed with that. And now we're kind of building our portfolio to create that track record. And in that sense, right now, actually, there's quite a number of LPs kind of coming back, maybe as part of celebrating reopening, coming back to this kind of rediscuss again, to reopen discussions about when is the next closing and what kind of timeline are we guys looking at. And actually several have also expressed that they would like to support next fund too. So actually there is some form of a pent-up demand in the need to deploy that dry capital. In the next few months, I believe it is still going to be very cautious. But we believe that I think by 2021, some of this optimism is going to be a lot clearer. So I would say that anyone who is now doing a first-time fund is still definitely erring on the same side, on the side of cautiousness. But any time next year is a good time to start thinking. But I kind of want to echo what Dimi said. We are getting a school of investors who actually believe that now is the right time to put into funds. Because finally we are seeing startups who are finally better valued. The exuberance and FOMO is dampening a little. I think startups in some sense is taking a lot longer to raise. So I think kind of with that overall sentiment, we're just thinking that actually this COVID era funds will probably be the best performing. So optimism is still there, and yeah, we're just putting our heads down and prove that too.
Yeah,
Okay.
so just want to add a very quick comment on that. I personally agree on the fund side. The reason why is because imagine if you're a fund manager or a portfolio manager that you need to deploy capital. Deploying capital to public market now is actually quite high, right? Interest rate is very low. So, and also investing in the fund now, it doesn't mean that we are buying at the current valuation. It's going to be deployed over the next few years. So I think that's a lot of it makes a lot of sense.
So yeah, to the panelists, maybe a question: has your way of looking to invest in a company's changed since the coronavirus? I mean, are there more things that you're looking for because of COVID, this new normal, you know, whether it's the founder, the business model, or, you know, anyone who wants to.
Maybe I'll start and then pass it on. So I think the hardest thing about investing during this period for a lot of us is that we're not able to meet people face to face. And a lot of our industry, as much as we like to make it seem like a science, is really an art. And a lot of it comes down to the trust we have in our founders and how much, you know, we're entrusting these people with our capital and to grow our capital, and we're backing these people because we think highly of them. But, you know, we can have this Zoom conversation, and Daniel, you know, I've known you for years now, so it's easy for us to have a relationship. But if you're meeting somebody for the first time over Zoom, and then you're supposed to write a $10 million check into that company, it gets very difficult. So I think we are, I think for us, we are still investing during this time, but we're spending a lot more time doing background checks, reference checks on founders, talking to a lot more people than we normally would. And in terms of diligence, I think one of the hard things as well is, you know, we're not even going to people's offices right now, right? It's, you know, the safety of our teams are very important. And so we're asking our teams as well to limit how much they're going out and meeting folks. And so we are, you know, thinking about, you know, in the diligence process, it's gotten a little bit more thorough because you haven't met somebody in person, you've never been to their office, but you're still writing a check. And so, you know, we are engaging with third-party advisors more to do a little bit more checking on accounting and finance than we normally would have. And we are also focusing a lot more on founder quality and making sure we can validate that through multiple sources than we would have in the past.
I can add on. I think we're also focused now on very contribution margin positive businesses. And I think I feel like in a lot of emerging markets like LATAM or maybe even sometimes in India and Southeast Asia, I think the lack of understanding of unit economics and contribution margin can be pretty worrying. Usually, you know, you ask for data from a startup, they give you gross margin and then straight to operating margin and EBITDA, right? But what we want to see as VCs is what is the contribution margin after revenue and all variable costs, so that we know that you're contributing to your fixed cost base, and on a per unit basis, you're making money. I think that focus on unit economics is more important than before. And I echo Aditya's point. Right? Recently, we closed a deal in Israel. It was a food tech company, and it was the first sort of digital-only deal I did. I met the founder like 7 or 8 times on Zoom, and he took us through the lab. We had a lab tour, and what we did was we used third-party providers locally and our friends and family on the ground to do the DD for us. So I think in the future, VCs have to get very creative, more creative on how they can use people on the ground in different countries to do DD for them. But you know, the amazing thing that I find about this whole shift is that, I don't know if you guys realize this, right? 6 of us are now on the screen with 200 other people watching us. We are creating just as much value as we would have otherwise renting out a room at the Westin, Jakarta, paying $10,000 for catering and having 200 people sit in the same room. This is free, right? This did not cost us any money, except Ibu Melly and Faisal put in a lot of work for this. But we are creating just the same amount of value, right? And so I agree to Aditya's point that it's going to be very difficult to do deals, but in a group setting like this, in a conference setting, I think we are adding just the same amount of value as we otherwise would meeting face to face. So the future of work, the future of communications, I think, is something that is going to be very interesting, and how it affects VC investing and due diligence, also, I think, very interesting.
Except I can't share a good wine with you, Dimi.
Sorry, yeah,
that's yes.
Well, we could have a pint separately.
Jeff, you want to add or?
Yeah. So for me, I have my view is that investing in the early stage startups now is getting more challenging. The reason why is because, okay, this is purely from an early stage. We are early stage specialists, right? We are focused in early stage. Pre-COVID, the play is go big or go home, right? That's the name of the game. Meaning that, okay, we need to know when to really go all out which is after we found the product market fit, after unit economics is pretty much sorted out, we understand that, we know that, okay, this is a good solid fundamental, and we want to scale, right? Now there's COVID. Everything else is the same except on the momentum part. How can we go all out and go crazy scale or even burn money to get market share when we do not know what will happen in the next 1 year? So that is what has changed. And then that changed how we think about the market is that, to be honest now, we also see quite a lower amount of pipelines in the early stage for, I think for a very clear reason. Uncertainty makes a lot of founders hard to predict what will happen, especially creating the exciting, dreams and big visions and all that, because there's a big uncertainty. So I think now there's a lot of, so now who benefited from this is some of the market leaders, some of the well-capitalized companies. I think this is an exciting time for them to making sure that the organization is stronger. They might have more time to really build the product that they wanted, when not a lot of people are really crazily burning money on marketing, so everyone focus on unit economics. So it's quite a healthy reset and making everyone back to the basics, which is healthy for the market.
Well, one thing I can say a bit also is, Aditya, everyone's talking about the challenge in meeting and investing in these times. I mean, can we argue also that this actually benefits the big guys? I mean, we see Mr. Ambani raising, $20 billion through Zoom, in the last 5 months. I mean, and looking at Geo, I don't know what monopoly is if not that, but is that good for the ecosystem? Because the big guys are getting all because money's, people say money, the C valuation is that because they are the only tech giant listed in Southeast Asia, and people want to invest in Southeast Asia. So is that good or bad, or
Yeah, I think it's a complicated question, right? I think capital is going to good companies with proven business models during this time. So I think there are a lot of startups, a lot of large startups in our part of the world that had burned a lot of money and who didn't have a sustainable business model that are actually not getting capital, even though they are very large businesses, right? And we will see some of these larger companies unfortunately fall away because they weren't able to figure out how to make money at the end of the day and provide that contribution margin that what Dimi and Jeff were talking about. But at the same time, I think attracting capital to good companies is not a bad thing either. And our ecosystem right now in Indonesia, we only have 4 unicorns. I mean, let's put that in context. I mean, India has something like 35 or 40. I mean, Dimi would probably know better, but they probably have 35 or 40 unicorns in India. With a GDP that's twice ours, right? Not significantly more, and a GDP per capita that's half of ours. And so I think there's still a lot of open spaces in Southeast Asia for large companies to be built. And I don't think we're in a situation in Southeast Asia where there's monopolies yet. Even Shopee, right? I mean, think about it. There's Tokopedia, there's Bukalapak, all very healthy businesses that are large and scale businesses as well. And so I think, I think we're not at the stage yet where we're saying capital is killing competition in our markets.
Yiping, just to focus on Indonesia a little bit, because you had an opportunity to lead an Indonesian e-commerce play before, actually. And what do you think is the strength and weaknesses of the Indonesian tech scene, and maybe even with this pandemic era, what has it become better or even worse?
I would say that the strengths of the Indonesian ecosystem. So I was there 2014 when Gojek probably has 7 bikes in Kemang. and the road is still mostly filled with Gojeks at that time. And ever since, I think Indonesia have changed dramatically. I guess as someone kind of observing from outside and then working in there, there's a huge development, positive development going inside Indonesia. I think the strength is that definitely that population, that 100 over million internet savvy, that middle class population, and there are a lot of strong problem statements just to solve in Indonesia that is actually replicable outside of Indonesia, right? Arguably, Indonesia's problem is way more similar to Vietnam, Philippines, than I guess Singapore. So just the country itself, I think it's a place with lots of problem statements and opportunities in that sense. I also think that one of the biggest strengths in Indonesia is that strong angel network. There's a lot of super early stage or pre-seed seed dollars, even if you have not opened up for VC rounds. I think that is extremely valuable, and many ecosystems around Southeast Asia do not enjoy this kind of support, both in family businesses, opening up doors for very early stage businesses to try out new technologies, new adoption, right? And then pumping in capital in a very early stage to give that vote of support. I think that is one of the strengths, and it really helps. That strong angel network really helps to build that startup up to a stage where then Jeffrey would invest in, and then we will then invest after him. So in that sense, it's still not obvious yet. For example, Vietnam angel scene is very, very early stage. We just formed the Vietnam Angel Network recently, about a year ago, and it's still very early days. Similarly, I think even with Thailand, it's also very, very early days. I think just with that, huge opportunity. But weaknesses, I think even the weaknesses have improved. I feel there was at that time a huge shortage of tech talent, and arguably with folks like Gojek and Grab, and then of course, actually in the early days, it was mostly Tokopedia, Lazada taking away most of the tech talent, and then after that, it's Gojek, Grab. We at Matahari Mall at that time were also culprits in that. I think there is still a huge shortage, and that easing of maybe foreign talent could help, or just being more open-minded to set up shop elsewhere. So I do see that more and more startups that I talk to, they have a tech shop in Vietnam, in Malaysia, or in Thailand. So I hope to see more of that. The other maybe weakness is customs regulations, I guess, is not very certain still. That has an impact on e-commerce still. The inability to have certainty whether you can import certain goods have actually caused a number of our suppliers to go bankrupt. So I think that if we want to have a very healthy e-commerce ecosystem, for sure, I think we should support local Indonesian-made products. But we also need to be cognizant that Indonesia don't produce many common goods too. So where is that fine balance to strike, where you're also pretty much friendly for your import-export? So I think, I mean, there are actually quite a number, but I think over the years, Indonesia government have listened a lot to the ground, the startup folks, and every year I hear a good development going on. Whether COVID has affected, I think COVID has made a lot more Indonesian startups also look outwards in terms of finding outside venture capital once they cross the seed stage. I think that is super positive, because that is one sign of them taking interest to expand outwards. I think everyone is kind of learning from the story of Grab versus Gojek, where Grab went regionalized super early, and Gojek took much longer. I think that lesson has also kind of created a model for many startups to start thinking early to regionalize.
Thank you, Yiping.
Yeah, can I just add a couple
sure.
of, I want to draw a very important distinction between China and Indonesia. If you look at China, yeah, there was a magical year in the year 90, again, in the year like, I think it was 2007, where the GDP of China, nominal GDP, crossed 4,000 ever for the first time. And when it crossed 4,000, the online shopper penetration in China almost doubled. It went from 9 to 10% to about 17%. And so there's this talk within Alibaba that, okay, this 4,000 GDP per capita is some sort of magical threshold where if we cross this, then people have more discretionary spend and disposable income and whatnot, right? The truth is Indonesia has been across that number for now, what, 1 or 2 years. It's already been more than 4,000 GDP per capita. And the online shopper penetration in Indonesia in terms of dollar terms is like less than 5%. It's very, very low, right? So then what's the difference between China and Indonesia? I think China invested more in the bottom of the pyramid in infrastructure, healthcare, and education than Indonesia did. A lot of people say that there are opportunities in tier 2 and tier 4 cities, but the tier 2 and tier 4 cities in China is fundamentally very different from Indonesia. In China, tier 2 and tier 4 city, everybody owns a phone in the same household. Indonesia, maybe they share 1 or 2 phones, right? In China, they're extremely educated, access to internet is amazing. In Indonesia, it's not like that, which is why, like the story of PDD, I'm sure everyone here knows Pinduoduo, an incredible stock that performed really well, right? How did Pinduoduo came about? Like when Colin Huang, before he founded Pinduoduo, he looked at Alibaba, the Alibaba brands, the Tmall, the Taobao, and the VIP shops of the world, right? And he said that, look, you guys want to compete in tier 1 and tier 2 city in Shanghai and Beijing, go ahead. I will go to tier 3 and tier 4, and I will sell fruits and toilet paper to the people in Anhui province. I bet you've never even heard of Anhui province, right? That's right, because it's a tier 2 and tier 4 place, right? So why was he able to do that? Because he could do that because the infrastructure was built, people had access to mobile phone, bandwidth was incredible, they were educated, they were raring to spend money online, and he had WeChat. We don't have all of that. So we cannot compare e-commerce, China and Indonesia one-to-one because there's many ingredients that China had and we didn't, right? And GGB as a fund, we tried to do a lot of correlation analysis to see the rise of e-commerce. We did a bunch of correlation analysis with, for example, how many kilometers of roads did the country build? How many subway stations did the country build? Is it related to any of these macro indicators? The truth is, there's so much noise in the data that you cannot isolate the ingredients in China and apply it to Indonesia. So just one nuance that I think is very, very important for people to understand.
Yes, if I can just add on that, because thanks a lot, Dimi. I mean, I want to be your student because I think you have a lot of good, history and data. So Dimi brought a very important point. A lot of people try to do the correlation, right? But you're exactly right, Dimi. So just want to share with you our view. Okay, so we are a fund and we need to invest, we need to deploy because we believe there's a lot of value that can be created. But what's the game? What's the playbook? The playbook, in our view, is not the same as in China or same as in India. So if you look at in our second fund, we have a lot of, like Kopi Kenangan is one, is pretty much initially brick and mortar coffee chain, but it's different settings and all that. So we believe that there's still an opportunity to be made. Our thesis, at least in the past few years, and maybe also in the next few years, is to digitize some of these conventional businesses, right? So building the infrastructure, maybe not so much in the infrastructure like what Dimi mentioned, but digitizing some of these businesses and making more and more, not only the consumer, but also the suppliers or some of these businesses online. Hopefully, once everyone is starting more connected, we can at least have a similar playbook to what China is seeing.
Okay. Thank you, Jeff. And to participants, I think if you wanna post question to the panelists, please do so in the Q&A button. So just on that, I mean, so what is interesting now for let's say Indonesia, or then we can go to Southeast Asia, because of COVID, or what business model is interesting? What is still missing? I mean, is it the Pinduoduo model, or is it Shopify, or is it the what do you guys see which could be interesting, which are not in the market, or there's no good player yet here?
Maybe I'll just start on this one. I mean, there's obviously a lot of areas, but I think the area that I see the most opportunity in, probably over the next 5 years in Indonesia, is digitizing the SME. I think consumer penetration of the internet has gone, and it will continue to go quite quickly. But now what we're starting to see, like we've seen in other markets, is that the businesses also have to start digitizing. And that digitization isn't just at the corporate level or the enterprise level. It really is getting down to that SME level, that toko level, the warung level, that needs digitization. And digitalization can take a variety of forms, right? It can be as simple as, accounting, bookkeeping entries for those merchants, or it can be about, a Shopify merchant, a Shopify-like model where you're putting somebody online that was previously an offline-only business, but still a very small business, relatively speaking. So I think that digitization play will happen in many, many, many different ways. As Indonesia is a country built on SMEs. The reality is the majority of people in the country are employed by SMEs, and the majority of companies in the country are SMEs, right? So there's just a lot of opportunity to increase productivity and profitability of the SME sector via technology. So I see that as one. And then the second thing is that plays into a lot of procurement and B2B purchases are still currently done in a very traditional way. So while, Daniel, you might go on Tokopedia to buy whatever you need for a home today, a lot of businesses are still, calling or faxing or emailing their suppliers to get that stuff. And so I think we see a lot of opportunity as well for that process, that procurement process, to be digitized as well, down supply chains.
Okay. Following that, there's a question here which says, digitizing is a buzzword that everyone uses, but would it work for everything? How about healthcare or agri? Is it harder to convince them to actually do, digital?
Yeah. So I guess actually that's good that you named those two sectors, because they're two sectors that I'm an investor in. So we're investors in a health tech business called Halodoc in Indonesia, which is the largest health tech business in the country. And I would say over the course of COVID, the number of hospitals that have looked to partner with us, multi-fold increase. The number of doctors that want to have the ability to do teleconsultations with their patients, multi-fold increase. And so the hospitals are realizing that, hey, look, COVID has made them realize that, hey, there's other ways to reach customers. There's increases in productivity that we can have with technology. And there's more money to be made in that way, in a way that we're not currently serving our customers. So we've seen in healthcare a lot of digitalization happening, whether it's telemedicine, whether it's appointment bookings, whether it's ERP systems in hospitals that are being procured now. There's just a lot more being done on the digital space in healthcare. In agri-tech, last week, I think we announced an investment into a company that helps fish farmers. So Indonesia has e-fishery. Indonesia has 3 million fish ponds where people are growing lele or tilapia in these ponds. And what our entrepreneur has done in e-fishery is he's done a lot to help the fish farmers increase their productivity by having sensor devices in the ponds that allow them to know when to feed the fish, and so that the fish grow faster and they waste less feed. And so we have tens of thousands of our systems deployed across the country already. So tens of thousands of farmers are already benefiting from this technology, and they're doubling or tripling their income. And these are people in like rural Java, rural Sumatra, a guy in not even a third-tier city in a kampung who's got a fish pond in his backyard who's using this stuff. So we see that happening, across both of those industries, and happening at a very fast rate as well.
Okay. Yeah. Jeff, what interesting?
Sorry, I just want to add one thing, because I just want to make sure that my previous comment, there's one important part that I need to mention here as well. So it's not only digitizing the businesses. There's also one part of the VC playbook that's actually important, if not more important than digitizing. It's actually the business model innovation. Or for example, let's take Kopi Kenangan because it's pretty simple, right?
Yeah.
So the question here that the audience asks is that digitizing might work for some businesses or some industry, but might not work for other industries. So, for example, like selling coffee. Kopi Kenangan is a working business model with or without VCs, with or without technology, right? But one thing that I want to highlight is that the interesting opportunity, especially from Alpha JWC perspective, is that sometimes we can pick working business and make it even bigger and faster, right? So Kopi Kenangan works before we invested. We just help to accelerate it faster. And in some verticals, for example, agriculture, we're also looking into a couple of verticals, including agriculture. Sometimes it's not so much the digitization.
Jeff, your voice is dropping down. Sorry.
Yeah. So it's not so much on the digitization. Maybe initially we need to play the VC playbook in the sense that, okay, forget about the net revenue first. We focus on building the infrastructure, making sure that the company is growing. Then we monetize later on. So this is actually a very important part of our playbook that actually will explain some of the successes or some of the things that might not be possible without the VC playbook.
Yeah. There's sorry.
Daniel, go ahead.
Yeah, go ahead, Yiping.
Okay, so yeah, just kind of want to add on to that. We definitely think the problems of Southeast Asia are pretty similar in the sense of things like healthcare, agri-tech, generally I would call it food tech, and ed tech is one huge field. But sometimes kind of needing to kind of invest in more than just that one winner company has been very tough. So kind of after, healthcare, after Hello Doctor, Hello Doc, Doctor Anywhere, we just find it tough to find that next platform that can be more catered to really the masses, where the bottom of the pyramid, how can they really benefit? In that sense of, yeah, so we find that same thing for EdTech. We think that it's such a huge opportunity for the whole of Southeast Asia. But besides, let's say, Ruang Guru, who can be a very strong number 2, number 3, number 4 contender, that is still, because it is not a winner take all in that sense. Other markets like Vietnam has its own types of sets of issues in EdTech. There's a fair opportunity that a Ruang Guru of Vietnam can emerge. In some sense, I feel like there are many interesting areas that VCs are looking for. But sometimes we feel that founders are a lot more keen to go into the very fast-moving space that are very, very hyped up already in the US or in China. So we kind of want to find more of the folks that really want to tackle real issues that are impacting Southeast Asia and at a scale that can really impact the common folk, and not just the middle and the high-end folks.
Okay.
Yeah.
Thank you, Yiping. I guess, yeah, there's question on healthcare. I think that's already been answered. I guess, there was a question of monetization also, right? I mean, Aditya, for example, I mean, for HelloDoc, have you seen the revenue also, balloon? I mean,
yeah, so I think, monetization in a lot of VC funded companies, like Jeff said, a lot of times you have to build the infrastructure first before you monetize. And so it's about building scale and access to a large customer base and then monetizing them at a later point in time. I think with HelloDoc, we started really pushing the levers of monetization November, December last year. And we are seeing really good monetization progress. You know, HelloDoc does a lot of different things. In addition to telemedicine, which we think of more as lead generation, they actually make a lot of money on the pharmacy delivery. So they take large commissions on delivering pharmaceuticals to customers after a doctor makes an e-prescription. And so I think a lot of these things will develop and come in time, but I think that focus on when to monetize is something that we all always struggle with. Because part of it is you want to grab the market first, have brand awareness, grab a lot of customers, and that's not always completely aligned with charging them a lot of money. So one of the things that we often see is that we need to build scale first, and then once people love your product and they find value in it, monetizing on that becomes a lot easier.
Thank you. There's a question on electric vehicle potential in, let's say, Indonesia and Southeast Asia. I know, Dimi, GGV just had a blockbuster IPO of, is it called, do I spell it correct? Xpeng?
Xpeng, that's right. The founder's name is Xiao. The founder's name is Xiaopeng. Yep. Xiaopeng.
Okay. So anything that people see in Indonesia as far as electric motorcycle or cars or?
Yeah, Xpeng was a great outcome for GGV and also for our partner Jishun, who led the deal from very early on. So very pleased for that outcome. I think there is, but I think there are a lot of things to be fixed in terms of subsidies, especially for electric vehicles. If you look at Tesla, one of the things about Tesla that I think is very hard to replicate and it's a huge barrier to entry for their competitors is the charging network. The charging network is really super key, and to have that sort of to have the density in the charging network that no one else can replicate, that is one of the key reasons for Tesla's success. And I think in Indonesia, how the government will support the building of a charging infrastructure, how they will look to subsidize some of these green and electric vehicles or even motorcycles, it remains to be seen. But I think I really believe that with businesses like this, it cannot just be solved with the private sector alone. You need the support of the government and the whole civil service machinery. Otherwise, I think it's very hard. So I think Indonesia, is there a problem? Yes, there is. We burn one of the highest volume of fossil fuels in the world. It's really bad for the environment. Our tier 1 cities, especially Jakarta, is sinking. There's too many people, too much pollution. So how do we think about distributing growth outside of Jakarta and the tier 1 cities? How do we think about living in the tier 1 cities more sustainable and reduce pollution? I think it's a big issue. So the macros are definitely there, but it's all about the micro, right? How the government works together with the private sector to solve this problem. But we've seen quite a few startups who are trying to tackle this in Indonesia already. Literally hardware startups building electric vehicles from scratch.
Yeah. On that, Dimi, you brought up a very interesting issue about environmental, and Indonesia is such a big lab to play with as far as environmental. We have everything, right? Ocean and forests, and again, I mean, all of us are focused on COVID right now, but I think long-term, much scarier is the issue of environmental damage. So I know, for example, Yiping, Quest, you guys have a sustainability fund also. We're also starting to look at, there's starting to be interesting things in Indonesia and Southeast Asia on sustainable businesses. I mean, SVC, do you guys starting to see this, or you leave it to the kind of green or impact fund?
Yeah, very good question, Daniel. Our sustainability fund is very much actually an impact fund, but to be honest, I think we find that we have to kind of take a stand. Do you really go impact? Where returns is sometimes a question, or you go impact with that the double bottom line approach, right? SDG goals. I do think that, for example, our sustainability fund, we are looking at e-mobility. So it's a big topic that we look at. In a sense of just really being led by what we are seeing right now with not the Tesla stock market, but in terms of governmental interests and pledges towards a more sustainable environment. Just in Singapore itself, I think we announced that we want to support electric vehicles by 2022, 2023. Although it remains to be seen what kind of infrastructure are we going to start building. In fact, we probably we're looking at a e-bike company right now which already have made huge inroads in Indonesia, not in terms of launch, but lots of partners in place, distributors, infrastructure players. We believe that in terms of sustainability, we still need to drive it in a way that we can justify both that double bottom line, and also if we want to invest in companies that help the bottom of the pyramid. I think an anonymous attendee just asked, when you serve the bottom of the pyramid, how do you monetize? I think that is really a tough question. Internally, like what Aditya said, we prefer the thesis of digitizing SMEs. In recent times, we have seen so many startups trying to digitize the micros, right? Like micro SMEs, the warungs and the really mom and pop shops. And we do scratch our head on, is this gonna take like, I don't know, 5 years, 10 years to monetize, or will it even happen? And when we come across a startup like that, I think we try to look across the whole of Southeast Asia to see if there are more convincing players also in the SME area where they are serving both SME and borderline micros, to try to prove our thesis there first. And then we move a little bit more down so that we can also serve the masses. I think I don't have very good answer to when that micro or that masses is going to help monetize, but I think Jeffrey wants to say something. I would think that we still want to back companies that are highly ambitious and build the right products that people will use, and we believe that monetization will come.
Yeah. So I just want to add one thing. By the way, that's a very good question from the audience. If you ask me where the monetization comes from, I think it's hard. But maybe there's a better question to ask, right? Maybe the better question is, is there still an opportunity for founders to work on that? The answer is yes. And how to capture the value is, let's say you are building the infrastructure for all of that. For example, Aditya mentioned about the tools for whatever accounting software or accounting tool for all these warungs. You might not monetize, but companies like Gojek or Grab might see the value in it. They might monetize in other ways. So it has to be a part of ecosystem. So that's why I think this space, this game is quite complex, and that's what fascinates me, right? So we need to think about it in maybe slightly different way. We need to slice and dice it, right? Maybe not the monetization, but is there any value that can be created by providing that products to the SMEs, which I agree. It's very tough to get to make money from them.
Jeff, let me ask on that question that on that issue that it could be monetized by selling it to, I guess, the large players. I'm in Indonesia, there's let's say Gojek and Grab, and I know Kopi Kenangan is one of the most well-known investment in your portfolio, for example. I mean, like this Amazon situation in the US, these big players, I mean, they want to be the key that rule them all, right? So, they have all kinds of cloud kitchen now. They can easily make coffee. I mean, I heard that Gojek is planning to do fried chicken. So how is this gonna, first of all, I guess I'm feeling a bit uneasy because it's gonna impact the ibu-ibu and warung-warung that sells fried chicken and goes to, you know, the money goes to a giant like Gojek, for example. But also with your other businesses, I mean, these giants can also easily start their own, you know, thing and kill your businesses.
Yes. So so we have a belief that digital economy, yes, there's a downside of a digital economy, like maybe some of the jobs will be lost, right? But we believe that in the grand scheme of things, digitization will advance humanity, right? It will make the economy and we will make everything better, supposedly, right? If we use it well. So the thesis here is, for us, I think the best outcome for Indonesia is to have the growth of digital ecosystem and the digital economy faster. And how to do it is that maybe Dimi, you can share your observation in China, but there's a playbook in China by the startup founders is that, okay, once they know, previously it's BAT, but Baidu, Alibaba, and Tencent. Once they know what these giants are thinking, they will create the company so that it will be acquired for the next 3, 6, 9 months. You can call it flipper or whatever, but there's a playbook on that. What does it mean? It's win-win for everyone, right? If they can focus on just building that one small module that will be acquired, right? And that will make all the acceleration of the digital infrastructure or whatever faster, right? So there's also a play to that, because we believe that it's not easy to create the ecosystem, and there's still enough opportunity for everyone in the ecosystem to actually participate in the game.
I think Daniel, just on that, I'll add. I mean, I think for companies like Grab and Gojek, I think they're large companies that want to do a lot of different things. I think they both probably have 500 initiatives each that they are working on. Maybe
right.
That's underselling it. And the reality is, as much as we love both companies, it's kind of impossible to be good at 500 things, right? I think that's the reality of the situation. And so I think you know, especially in this environment, given that everybody's focused on their core competencies, I think there's a focus on the basics. I think, you know, I don't think that there is that much of a risk of those businesses really stifling innovation in Indonesia yet. I don't think either of them are big enough to actually do that, and I think they're also growing up as organizations. And in terms of your fried chicken example, it's actually our portfolio company Rebel Foods develops the cloud kitchens and works with Gojek, and they are creating fried chicken. But that doesn't mean that Gojek doesn't sell the fried chicken of the ibu on the side of the street either. She's still selling it. And Jeff's company Kopi Kenangan is one of the tenants of our cloud kitchen as well. So there's a lot of partnership and collaboration that can also happen. So I don't think it's something where one kills the other. I think a lot of times they enable each other to exist.
I want to add on to that in a different kind of angle for my appreciation of the Indonesian culture. I think more often than not, you find that the Indonesian companies get to a point where they actually collaborate more than just compete against each other. There are, of course, lots of competition, but there is also a lot of empowering that is happening, right? A lot of uplifting. I think these days we see a lot of founders, they are also quite driven by their passion to really try to tackle a bit more of that bottom of the pyramid type of questions. So I feel like, I think with Aditya and Jeff, I agree that in the sense of the fried chicken example, sorry, I need to pitch Cloud Kitchen, Yummy Corp, for example. They don't do their own brands, so they empower other brands, right? And that is quite interesting in a sense that there are really different ways to tackle the same problem. And I find that Indonesian companies have always been able to find different angles for the same business models.
Thank you. There is a question, you know, sorry, we won't be able to take all the questions. Ren Tanaka asked about Indonesian e-commerce. If you guys can see, let's say 5 years from now, you know, in China, there's 3 large players. In US, 2. In India, there's, you know, let's say 2 or 3, depending whether Amazon can make it or not. Who's gonna survive? Who do you see still, you know, competing in 5 years? And again, you know.
This is okay. Aditya, you go first then.
Yeah, no, I mean it's a complicated question. I think we generally have a philosophy that most markets are not winner take all markets, and that's how we generally invest. I think there's very, very, very few industries and companies in the world that have greater than 80% market share, and so, you know, I think what you would see, what you alluded to in China, is that, wow, everybody said Alibaba and JD are so big already. How can we possibly have any more e-commerce in China? But in 2015, PDD started. And look at PDD today, it's massive.
Yeah.
And so, you know, you know, as Dimi mentioned earlier, we're only 5% of our commerce is e-commerce right now in Indonesia. There's just so much room for growth that I don't think we need to get into a stage where we're saying, you know, it's not a zero-sum game, where if I grow, you don't grow. The market is still so large and the penetration is increasing so much that, you know, I think there's a lot of opportunities for many players to exist in the market, in the e-commerce market.
Very diplomatic, I did, but anyway.
Jimmy, your turn. Be undiplomatic.
Oh, goodness. You know, we've obviously done a lot of work on this, and they're all our good friends, you know, the founders and the management team. So I wanna talk about this without mentioning names, but I think they all have their strengths. For example, you know, one of them is very focused on, you know, slightly bottom of the pyramid with a key category as fashion and apparel, fast fashion, very high frequency. People buy a few times a month, but very low average order value. But the frequency is there. They are able to connect the supply chain from China, bring in really cheap stuff, and Indonesians love that, especially people in, you know, the bottom half of the pyramid. And then you have another one that's like, I guess you could say, the marketing messaging is a bit targeted at people who are a bit wealthier and in the upper half of the pyramid. Average order value is higher, but frequency is lower. Focus on electronics and more expensive goods. A belief that their customer base is a lot more high quality because of the tick rates and whatnot. And then you have another one that's focused on, you know, I would say maybe even industrial goods, right? Like nuts and bolts and small businesses who buy from them. And they actually serve both small businesses and also consumers. And there's a lot of drop shipping on the platform. And then you have another one that's like, you know, funded by one of the largest families in Indonesia. They will not die just because they have the money and they are very sentimental asset to the wider family. So you have four, you know, and then you have another one that's also funded by China, right? By a big Chinese player, right? Again, focus on this on the branded sort of electronic goods. They also, I think, will continue to survive. So I think, at the end of the day, who has a strong business model, right? But the first one that I mentioned, I really like that business model because that one, I think, has a slight edge over the others because they have a gaming business that is a pure cash cow. And if you pay attention to the gaming business, and this is all publicly available information, right? You pay attention to the gaming business and the e-commerce business, they are mirror image of each other. The gaming business is earning 1 billion EBITDA. The e-commerce business is burning 1 billion EBITDA. Whatever money they make there, they put it to the so, and that situation is very unique because the founder does not have to raise capital to dilute himself, and so he will continue to be highly incentivized to work on the business. Versus the rest who keep raising money and potentially diluting themselves up to the point where there might be a day where they feel like, oh, you know, I don't own that much of the business anymore, right? So I think comparing the 4 or 5 business models, they're all very different. They're all focused on different categories. Who I think will win depends on progression of the consumer as well. In the first example, I feel like it's much easier. My personal opinion, I feel like it's much easier to go from the lower half of the pyramid to upgrading to the upper half. I think it might be more difficult to go from high value consumers to targeting lower base of the pyramid. So that's my take on it, but it's my personal opinion. Yeah.
Just on e-commerce. Sorry. Go ahead, Jefrey.
So I'm not gonna try to compete with Dimi, the historian and economist. But I think maybe I would like to offer a little bit more, I guess, for fun. I think I see Gojek and Grab are e-commerce companies. I see them as O2O. I think they have the other O version, right? So that part of the development we have not seen if they could actually fulfill or one day become a super app to increase the e-commerce with a strong omni-channel approach, right? Because they own offline now, in that sense. In the sense of paying your payments to GrabPay or Gojek. So I think that's very interesting. And maybe the next development that I would also like to see is how social commerce play out.
Right.
Yeah.
That's a big thing. Yeah.
Especially, I think in Southeast Asia, it is very much a super highly social set of countries we have. So I think that is still very nascent, and in the next few years, something is going to probably also explode there.
I think you're talking about two of the big trends, social commerce and also O2O, right? I mean, Amazon now in the US has 9 store format. I mean, Geo gonna do the future platform and their stores. So I think that's the way to go. I personally think that O2O is and e-commerce is absolutely the way to go. We only have 5 more minutes. So because we're Harvard Club, we need to I mean, this is important to our community. One of the important point of the UN SDG is diversity and inclusion. And in fact, one of the issue is from gender in tech investor community. We sadly were not able to find a senior female Harvard graduate that is in the tech investing VC sector, but we're very happy to have Yiping with us. Can you guys comment a little bit on what you think, what your firm is doing on this front? And again, not just gender, but other kinds of inclusion.
I can start first. So GGV is about, I think, anywhere from 60 to 65% women. I think what we can do better is maybe we need more. A lot of the women are in our platform services team. They're very important. They support our startups, but we need more women in the investment team, and we will continue to improve. But we're about 60-65% women. And at GGV, we're trying to build a new brand of venture capital where it's a single global fund investing globally around the world. And we have about close to around 20 investment team members around the world. So on a per investment team member AUM basis is pretty high. But what's unique about GGV is that behind this 20 plus investment team members is quite a big group of people who are product experts, entrepreneur in residence, marketing folks who help our startups do their marketing, advice on their marketing strategy. We have folks who help them recruit, and we have a bunch of other services for our startups. And amongst all of those, we have a lot of women working in our company. And I think this is it's a genuine problem in venture. I think we also need to look beyond the funds and the GPs and ask ourselves who's investing in the funds, right? Because we raise money from certain institutional investors. So I think actually the diversity has to improve throughout the whole value chain, from where the money comes from to who is managing the money to the startups, female founders and female management. Only then can we improve from the upstream of the value chain all the way to downstream. We can have more women. I think if you just look at GPs and VC funds and you say you need to have more women, it's very hard. We need to have more women across the whole value chain of venture capital investing, from the investors to the fiduciaries of capital, like us on this Zoom call, and then to the startups and also the founders and the management team.
Yeah, so just very quickly to add to that, we have more than 50% of our team members in Alpha JWC women. We have almost or around 50% of investment team is also female, right? And we have one female partner, Erica. She's driving our value creation initiatives. So just one thing that I learned, I learned many things in OPM and HBS. One very interesting key takeaway that I would like to share with everyone as well. This is a Professor Boris Kreuzberg. So one of the key nuggets that I learned from his leadership class is that there's a gender arbitrage in hiring, right? So okay, we ask ourselves how could we build a better organization? How could we how we could build a better organization? And what he shared few tips, and one tip is that there's a gender arbitrage in hiring. Right, so based on his research, a lot of more bias towards men. So if you are aware of this and remove the bias, you will outperform the market, right? So us at Alpha JWC, we try to remove the bias as much as possible. We don't look into whether you are male or female, right? It has to be equal, and I think so far it works well for us. Of course, we want to see more and more female investment partners, right? But I think it's just a matter of time. We will get there.
Yeah, I actually think Southeast, I mean, to be honest, I agree with you, Daniel, that a lot of it has been made about the lack of gender representation at VC firms. I would say Southeast Asia is actually more diverse in our VC firms than the US is. So I look at our investment team, we're 50% women as well. So you've got three out of 4 panelists who 50% plus of their investment teams are women. I think that says something about the market that we're in. And I agree with Jeff that it's just a matter of time for there to be more female partners and GPs. But the great news is that a lot of women are very interested in doing this, and they're doing it really, really well. So I think we're going to be fortunate in our market to have that over time. I think one of the things that we have actually noticed, though, is that there is a lack of female founders. So our portfolio right now is just actually doing this, and we all have LPs that are focused on some of this stuff as well, and we fulfill a lot of their data requests. In our portfolio, we have 13 companies. Only 5 are either founded by female founders or have female co-founders. And even that, when we mentioned this to one of our LPs, they're like, wow, that's a very high percentage of your portfolio. And I think it's just, it's one of these things that we just love to encourage more women, founders to actually start businesses and take risks, because I think it'd be very good for all of us in terms of investment options.
So being the only women panelist here, I want to say thanks for adopting me. And, maybe I'll do an OPM post-COVID when we travel to Harvard. I think that this is still a very important issue, and there's way more awareness than ever before. The whole world is talking about it. And I must say that the guys here started off this conversation first, so I must give it to them that they're pledging their support to hire more women senior leaders. So it's a really great job. Just to share a statistic, so our fund 1, which is very much an angel fund, we have 30% of our companies with at least 1 female co-founder, or LGBT or minority co-founder. That's our fund 1. Our current fund 2, we have a crazy 60%. And the interesting thing that we are seeing is, with this mix, I think we can probably very much validate the statistics out there that we see a lot more stable unit economics. Numbers are looking really good. and there is...
Is that because there's less testosterone? Is that what you're saying?
I think there's more extreme viewpoints on both sides. I think there's a way healthier debate going on. So I think we are probably a testament of diversity investment, and we would love to provide such data to more groups who would love to find out more about how this really is beneficial. I think one thing that in the past we really we're still always talking about how to get more female founders. In fact, today, we still are talking about the same issues. I hope that we can also move on to talk about women who's already giving birth or about to give birth, and how do they come back more successfully. So I would like to move that conversation to that. But great job, guys. I think you guys are really very supportive of women founders.
Thank you. Thank you. So with that, I think with that encouraging note.
And in the investment scene, of course.
Thank you. On that encouraging note, I think we would end this. So Yiping, thank you so much. Hope you'll find a nice villa somewhere in Spain. Dimi, we see a couple of PhDs in your future, I think, and you know, many books that you can write. You know, Adit, please, I would like to be the taster for the Gojek fried chicken, please. And Jeff, you haven't sent me any gula or kopi kenangan, so thank you so much. And thank you to Harvard Club. Thank you to Nurul and Faisal, and we look forward to more Harvard Club program in the future. So stay healthy and success.
Thank you, guys.
Thank you.
Thank you.